Hello, everybody. Just give me a moment. I have to get the stream shared out. It start a couple minutes late, which I do apologize. But I do want to make sure that everybody is here. And let's go to a symbol that I don't usually work on too much. Let's go to. We'll just do gold. Good afternoon, everybody. Okay, got that started. Good morning to you, Silver. Good afternoon, good evening to for me. What time is it over there for you? Probably like super, super early. So I'm just gonna wait a couple minutes just to make sure that everybody's joined. But we are just going to be going over simple market structure today. I don't really have a curriculum or anything written up for this right now, so we're just going to kind of wing it, but it's going to be a pretty easy lesson overall. We'll go with this. So just give me a couple minutes to make sure everybody's here. Oh, you're on the same time a girl named Anna is on, which I have to make sure she's awake. Hold on. Wake up. It is class time. Alright, everybody, so today's class going to be very, very simple. Might even seem very stupid, but one of the things that I do as a trader is I like to identify structure. And structure is something that's very real. It's not just us drawing things on a chart that we hope for it to play out. It's something that traders have been looking for literally before I was even born. Um, but one of the ones that I specifically want people to focus on is either the standard cup or the inverse cup. Okay, and we're gonna kind of just go across multiple time frames here. But I want to turn off the Bollinger Bands and everything so we can just see. Now, cups are kind of structures that you'll see all over, and this is just the daily time frame. But a lot of structure can be either just a standard cup or an inverse cup. And you can almost attribute every single structure to that inverse cup. So we're just going on the daily here, but we will correlate this to other time frames here in a moment. But one thing that I kind of want everybody to start doing is to identify whether a cup is present or whether the inverse cup is present. Not so much working on handles or anything yet. Um, you know, Usually we would say a cup and a handle or an inverse cup and handle. I don't want you to really focus on that too much. What I want you to just do is simply just pick a chart. So right now we're on Exxon. If you want to go over something specific, let me know in chat. But just specifically, just pick a symbol, and I want you to kind of just start identifying the cups or the inverse cups that are on that symbol. Okay. We can see that on X on here, we're starting to see a lot of, the yellow cups. Now, when I'm drawing my cups, I draw the bullish cups as yellow. You can do whatever color you want, whatever works for you. And I use the bearish cups as either blue or purple. In this case, we will use purple. But as you can see here, kind of just really filling this whole bar out, that on this daily time frame, we have a ton of bullish cups going out. Okay. And what that kind of leads into is where the expected price action is wanting to go. Yes, we have some of these kind of looping over each other. Sometimes we will have a standard bullish cup going into a bearish cup, going into a bullish cup, going into a bearish cup. But it's important to understand that all of this structure is there for a reason. Okay. Um, Again, with the stock market, every single penny that goes in or out of a stock matters. It's done whether it from a algorithmic intention or a human intention. It's done for a purpose. Okay, so our job as traders is to be able to identify what every penny is going for. Now, as you can see, in this whole area, we start building a ton of just bullish cups, bullish cups. Now, what is that kind of alluding to? Well, bullish cups bring bullish price action. This eventually leads into a very large breakout. Okay. Now, one thing I want to do with this is not just show that, you know, bullish cups can kind of lead into that breakout. This also happens with bearish cups. If you start seeing a ton of bearish cups forming, usually it'll allude into that very large breakdown as well. But one thing I want to show is kind of on the hourly time frame. And let's just go back to before the breakout, back to when we start seeing some of these cups. And I will have to tighten this up a little bit. Now, on the hourly time frame, and this is just from us drawing cups on the daily time frame. Do you see how we could start seeing some of these cups being a little tighter now? So, for example, we had this cup on the daily time frame, but this cup is actually formation of a bunch of other smaller little cups. And I promise you this does have a reason that we're going to be doing this. It might seem annoying for a moment, but there is a method to this. Okay. So it's like on this hourly time frame, right? We can kind of delete this bigger daily cup. Well, we're starting to get more defined price action. Okay. We're starting to see, okay, well, it wasn't just a single big cup, right? It wasn't just a single bit of price action. It was a lot of price action leading into that created that big cup. Well, all of this price action, as you could start seeing down here, again, this is within the hourly time frame. So these cups tend to lead from one session to another. Okay. Yes, I do have the after hours and everything turned on. That's something I always track. But one thing we could do is like, for example, this session right here, and let's go ahead and just hide this larger cup for a moment. That one, hide that one. Okay. And let's say we're not even halfway through that session yet, so we don't even know that this yellow cup exists yet. But we do start seeing that, okay, this is starting to pull down. Well, what happens when we see the market pull down, it can form that upward cup. Okay. Kind of the inversely, if we see the market start pushing upward, it can create that inverse cup. So as we start seeing this cup forming, day opens, we see a little bit of buying that's not continuing to push downward, not continuing to form a further cup to the downside. Okay. So what is this kind of alluding to? Okay. Very, very likely we're going to see that bullish cup form. And, exactly it formed. And even though we're not talking about handles too much here just yet, additional cup formed. That's creating handle to the upside. Additional cup formed. Additional cup formed. And then finally a breakout. Now, going even deeper here. Okay, so we go to the 30-minute time frame. Let's just go back to where we were at, wherever it was. See back in here. Okay, so 30-minute time frame. We see that we're starting to see a lot better and more defined structure in here. Okay. So these cups aren't just completely random, they are starting to form actual structure, and that structure that we can use within our daily time frame, or not the daily time frame, but within our daily trading sessions. For example, and let's go back to, I want to put a rectangle on it, but kind of this trading session that started right there. And we're just going to pull it all the way back to these trading sessions. Now, the reason why I have this marked is because we will be going down to the 5-minute time frame to kind of show how this larger inverse cup formed, how this larger bullish cup formed. But this is something, again, we can use within our day trades, within swing trades and everything to be able to really identify structure. Now, of course, there's all sorts of different structures. There's head and shoulders, there's cups and handles, there's double tops, double bottoms. But ultimately, everything really can be summed up to a cup or a inverse cup. For example, we do have a head and shoulders forming here. Okay. Now, that can be a couple different bearish structures. So that could be that inverse cup right there, creating that left shoulder. From that left shoulder, we see, okay, there's this cup that's bullish now, pushing us into, the head of this head and shoulders. Then from that, we have an inverse cup. And from that, we see, okay, we have a left shoulder, the head. Now we're starting to look for that right shoulder to form. Okay. Now we see that in here, the head gets, goes all the way up to the 11 or 113.44. Okay, so that means that if we want an invalidation of this head and shoulders, we need to have a cup basically pulling up above this head. Okay. I'm not really looking for it to invalidate this right shoulder. I want it to invalidate the actual full structure itself, which would be that head. Okay. And kind of just getting into this here. So we see, okay, we see potentially we start forming a cup here. Well, that cup doesn't fully form. It kind of breaks down and rejects. Okay. So we can close that cup out. And from that rejection, we see, okay, there's an additional small inverse cup here. And there's further bearish structure building. Then all of a sudden we get a pull upward, but from that pull upward, it's still forming another bearish cup. So, okay, now we have that left shoulder, the head, and we do have the liquidity for that right shoulder. Okay, but what's starting to happen here? We see this cup which is a bullish cup formed to the upside. And what this does is this invalidates this structure right here. So now we can kind of delete that. And that means, okay, well, if this was a right shoulder, it's now been entirely invalidated. Okay, because this cup goes all the way up, almost to the very, very top of where this head is. Okay, so that means that the bearish structure in this range isn't real. Okay, it's not real bearish structure. It's not going to, um, give us that downside that we're looking for because this bullish structure is starting to invalidate it. Okay, and from that invalidation, what do we see here? We see further invalidation. We see the entire invalidation of that head on that head and shoulders. Okay, with that entire invalidation, that means that, okay, we can delete that inverse cup. We can delete that inverse cup. I don't really need that bullish cup anymore. Don't need that. Don't need that. But we could see that there's bullish structure in here. So was there a cup in here that we missed? Well, potentially. Maybe there was this cup right here that we just didn't catch properly. Maybe there was that cup right there that we didn't catch properly that was alluding to that further breakout. Because from these cups invalidating the previous bearish structure, we had a massive breakout. Okay. From that massive breakout, we see that it happened over the course of kind of a couple different sessions. So we see it pull upward. Okay. And from it pulling upward, what is it doing? It's starting to flatten out, flatten out, flatten out, pull upward a little bit. And then all of a sudden we get a gap down and we pull down. So now we have to contend with this for the next few trading sessions. Okay. That one, there's potentially a inverse cup here. So we're still continuing through that trading session. We hit the bottom. From the bottom of that cup, we usually expect an inverse handle, but not really talking about that here. So inverse handle, inverse handle, inverse handle. All of a sudden, wait a second, this is invalidating this cup now. This entire bearish structure has now just been invalidated by the handle. Okay, so we could delete that. That means that that structure doesn't matter anymore. What we need to identify now is that, okay, that invalidation of that structure actually created a bullish structure from it. So this bullish structure fully invalidated that previous structure. And what are we looking from this structure? We're looking for a continuation, okay? We see that in the after hours, overnight, whatever, it pulled upward. So we'll use that. We'll see, okay, this pulled upward and it's pulling downward. Start of the trading session opens, we see it curve up very, very slightly. So that curve upward is telling us, okay, maybe our price action is going to be curving upward. It does, completes the full cup to the upside, and then that's a bullish cup. Now, from that bullish cup, we'd usually be looking for, again, a handle. Now, that's not exactly what we've been given here, right? From this trading session, hold on. From this trading session, we hit a new high, and what does that do? That creates this inverse cup to the downside. Okay. One thing that we see here and how we can identify that this was downside that was going to be coming is because, again, it invalidates this previous cup. So we have that potential bullish cup there. What are we expecting? We're expecting further upside. That's not the case here. We go from this trading session to this trading session. By the open, it's already invalidated this cup. Okay, so we know that, okay, bearish structure is coming for this trading session, which on that trading session, that's showing that, that's a pretty good move downward. Okay. Catching the top of that trading session would have been at the 117, well, a little more than that because in the morning. So 117.67, and the downside of that session was all the way at the 116. For Exxon, that would have been a very large move to the downside. So use these cups or inverse cups. Okay, if you don't know any other structure, you can always use your cups and inverse cups. And kind of let's go over this even on the 5 minute time frame, because this is again what I like to scalp on. And scalps are day trades. So let's kind of go into today's session. So today's session, and to really begin today's session, we need to look over yesterday's session. So what happened in yesterday's session? And I want to go to the 30-minute time frame here just for a second, just to kind of look at all of this. Okay, so we see there's this very large pull downward. Okay, what is this potentially making here? Okay, potentially this is going to be forming a cup. And this is even before we start seeing this buying structure upward. We see that, okay, 30-minute time frame, we have potential inverse cup here, okay, which is telling us that can be expecting a handle to the downside. Kind of do. We get that downside handle right there. But from that downside that we get, this starts building a upside within this bullish cup. Okay, because eventually, if we continue to see this structure continuing upward, what's it going to do? It's going to invalidate this previous inverse cup. Okay, so we can use these structures to, even though they're going to be invalidating each other very often, from that invalidation, that tells us a very clear signal that, wow, okay, this is very likely heading upward. Not only is this heading upward, we're seeing bullish structure once again, seeing bullish structure, seeing invalidation of potential bearish structure right there, which I'm going to talk about this bearish structure between the cup and the handle. It's something we do look for, but with the invalidation of that bearish structure, that's telling us, okay, very, very likely what's coming next is further upside. And what does that further upside look like? Well, it looks like where the top of this cup would be. Well, how do we know where the top of that cup is? Well, because that is where all the liquidity came from. Okay, so we're expecting that same level to basically be coming in very, very soon. We have we have bullish structure that's basically, reaching upward like a hand. That's saying, okay, I want to go upward, downward, downward gets invalidated. I want to go back upward again. Okay, this is telling us that very, very likely Exxon over the next couple sessions will be back up at that 155. Okay, and I would actually like to follow up on this in a few sessions just to, verify that that is true. But again, using your cups and handles or using your cups specifically is very, very important. Now this is going to look like a mess for a moment because this is the 5 minute time frame. But this is something we use on the 5 minute time frame quite a bit. Okay. And let's just delete the structure so that we can look at it from the 5 minute time frame perspective. And I want to go to the actual trading session here, which looks like it was right there. Okay, so it started right there. So let's go over kind of today's trading session. And again, to go over today's trading session, we do have to kind of look at what happened with yesterday's trading session. So what did happen with yesterday's trading session? We see that there's inverse cup that created downside liquidity, but from that, we see bullish cup. That bullish cup invalidates previous downside. We see a smaller cup here. It's not really reaching too much higher, so that's telling us, okay, if the top's not coming in, then very, very likely this is going to be forming that bearish structure to invalidate that previous cup. We do see the invalidation happen. So what does that tell us? That very, very likely we're going to be seeing some downside. Well, we got a gap down, and then the next trading session starts right there. But we did have some previous structure built here. We see it starting to curve, 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 and all of a sudden we're at the open. Now, are we going to start pulling downward or pull upward? Well, we start pulling upward. And what does this do? This closes a cup almost to the T. Okay. We look at this level right here, that hit literally to the cent. Okay. Which is telling us this is a bullish cup. Okay. Well, what do we expect from bullish cups? We expect handles to form. So we expect downside to occur, but from that downside, we're expecting further upside. Okay. We're expecting continued, basically that continued cup and handle. And from this price action, we might see a slight pull down because of that handle. Now, one thing with this pull down that we are looking for is that is this going to invalidate the previous structure? So far, it has not. Okay, so far the structure is holding strong, so this cup is still very much intact. Okay, now if we see the overnight continue pulling downward and pull down all the way to where it invalidates this previous cup, then what do we see already formed here? We see this inverse cup, okay? And from that inverse cup, we expect further downside. So we would expect that further downside, okay? Hasn't completed yet, but again, this is kind of just how I like to think about trades. Um, the market's very structured in how it wants to build liquidity. And being able to identify just the basic cup or the basic inverse cup is really going to be helping you a lot within your trading. I kind of want to look at SPY here for a second. Gonna look like a mess, but this is kind of really important. So it's like today, and for today, we have to really look at what happened with yesterday. I want to delete some of the stuff because it doesn't matter too much. But with yesterday's price action, we saw that massive, massive pull down. Now, whether I was bullish doesn't really matter, that's for completely different reasons. But what did this create? What did this price action create out of all the selling and buying yesterday? Well, that created a really nice cup. Okay. What's that telling us is likely coming? Well, what's likely coming is further bullishness. We're going to be seeing this cup forming right there. From the cup forming right there, we have this smaller cup. From that smaller cup, we have a little bit of push. That turns to a little bit of an inverse cup, but that quickly gets invalidated with a push to the upside. So we could delete that. Now, this upside push doesn't have good bullish structure. For example, you could see that we don't have a further cup here. We have potentially this inverse cup. Okay, and what do we expect from an inverse cup? An inverse handle. What do we expect from a nested inverse cups handle? Another handle. And from that, we see that there is this smaller cup somewhat starting to form, but it doesn't form all the way. It doesn't pull up to invalidate its previous inverse cup. So that doesn't matter too much. And what do we see from that? Inverse cups lead into the breakdown. So we have this very, very nice breakdown on the day. Okay. Now, one thing that we looked at before we really started to identify that this was going to be super, super bullish structure is that potentially we now have this very large inverse cup. Okay. And that's what we looked at when opening today, is that, okay, yesterday was a nice day. It gave us, a little bit of buying reprieve. However, we're kind of selling into the open. How do we approach this? Well, we need to find where the bottom of this cup lands. We found the bottom, and we found that bottom through multiple different ways. One of the ways is, again, using our Bollinger Bands that told us that once we basically got off the road there, that was the turn, or that was the time to go long on a call. And that's why we were able to load calls today and make a lot of money. But from this bottom of this inverse cup, what do we expect? We expect bullish structure because we are expecting at least a handle to form. Okay? Because if this is going to be the inverse cup and handle that it's supposed to be, then we're going to see liquidity pull it upward and then start dropping back down. Now, what happened here instead? We see that we pulled down, start pulling all the way up above that cup. Okay. And once we hit around that range, that tells us that that entire massive inverse cup that was previously built is now invalidated. So all the calls that we still have down here, there's massive upside to them. Okay. And that's how we knew today that we are really going to start pushing pretty dang hard. That's why I was telling people really don't start exiting stuff until around that 743 range, 744. Um, Throughout a lot of my posts, you can see that we were originally targeting the 741 because we wanted to see the invalidation of this inverse cup. Once that inverse cup was fully invalidated, it really opens up the upside because what do we expect to happen? Well, from that bullish cup, we expect bearish structure to form at the top. We got that bearish structure, and from that bearish structure, we expect again another cup to form. Well, we got that cup to form. From that cup forming, we then get a small handle, and currently that's where the market is. So use these cups to really help you map out where the market is going. Okay, because it can tell you a huge story before it even happens. Um, again, today after we saw the bottom of that cup come in, um, we were already starting to try to target this upward cup. Okay, and think about that prior to, hindsight. Basically starting the trading session, seeing all this downside, we buy calls into that. So what does that mean we're trying to target? That means we're really trying to target the high of the day, okay? Because we're looking for this to turn into an upside cup. If not, then we're trying to target wherever the top of this cup is going to be, because this is telling us that there's going to be some upside for further liquidity, a rejection, and then some downside. But we didn't see the rejection, we didn't see the downside. So that gave us the conviction to completely hold the calls until the full invalidation of the inverse cup. Okay, so I've been talking a lot. Let me go ahead and read over chat for a second. All right, let's see. What invalidates a cup or inverse cup? Okay, so that's a super good question, and this is going to be that example here. Okay, so we have on the 5 minute time frame, and this is the SPY. We see that between yesterday's close to today's basically very early open, we saw this structure. Okay. Now, this was a guaranteed inverse cup. Okay, there's no doubt about that. We see that the bottom here is holding the same ranges. Okay. So this is a very strong inverse cup, which is telling us this is a bearish pattern. From this bearish pattern, we're expecting further downside, okay? Which we got. We got that further downside. Now, what happens from that further downside? Are we expecting further downside from that? Potentially, but we got an overshot here. Now I'm going to show you that in a second. But that downside cup is something we're looking for kind of like this. But we got this entire range below that, which that means that this inverse cup and handle broke out to the downside. It did its job. It completed it. It was doing everything it needed to do to get us to the downside. Now, from that downside, we see, okay, this cup has been completed. Structure's been pushed downward quite a bit. What is this leading us to? Okay, is there anything we're missing from this downside here? Well, potentially all the way from yesterday. Okay, so potentially this was forming a very, very, very large inverse cup all the way from yesterday. So we have a few different structures to start invalidating here if we're going to be looking to the bullish upside. Okay, but one thing we are looking for is again that inverse cup. Okay, because from the bigger inverse cups, we want handles. Okay, those handles are going to also be inverse cups or some form of structure, but we can usually always attribute it towards that inverse cup. Okay, so just from the get-go, we're looking for a push upward and then a push downward. Okay, well, what happens today? We get the push upward. Okay, we start getting that push upward. See a little bit of invalidation right here. So we can look at that little bit of selling right there as a signal. Okay, and I'm gonna delete this previous cup just for a moment, just to kind of give us some room to draw here. But we see this smaller bit of selling happen here, and that tells me, okay, is this trying to form a cup? And is this trying to form a handle? Okay, so that's something I started to look for because again, we are looking for some side of or some form of bear or bullish structure from the bottom of this inverse cup to push us upward. Okay, to build that bearish liquidity to pull us back downward. So we were looking to be bullish on this bearish structure for bearish reasons, even though it turned into very bullish reasons, and I will show you why. So from that smaller cup building, we see, okay, we start heading up. Start heading up, 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 up. And the only bits of selling we have in here are right here, and right here. Sorry, I should probably just use an arrow to make this a little cleaner. But from this entire upside, what do we see? We only see three small spots of selling. Well, let's correlate that to our inverse cups here. I know it looks like there's a lot going on the screen, but this does have a purpose. So looking at our cups here, is our cup invalidated in this range? No, not yet. Our bearish cup is still looking fairly strong at that level. Now we get to this level. This is starting to become the top of that cup. Okay, the top of that cup at this point is only $1, basically $2 away. Okay, so that's telling me that this selling here needs to really kick in. Okay, the selling needs to really start pulling us down, or else it's going to invalidate this inverse cup. And how do we know if it's invalidated? Because the price pulls above the previous high. So once that occurred, once the price broke the top of where the previous major cups were, that tells us one thing and one thing only. Those cups are gone. Okay, that bearish structure no longer is within the system. The algorithms are not looking at that as bearish structure anymore. So what can we do? Okay, we can see that, okay, the bearish structure is gone. We now have this very nice bullish structure building. Okay, well, where is this going? Where is this taking us? We've invalidated this bearish structure. We're starting to head upward. So what do we start to expect up here? We start to expect a little bit of selling, okay, because the the cup has been fully completed. It has invalidated the previous level. As you can see, there's really nothing to grab onto over the last few trading sessions. So we're working with this as a cup and handle. So we're looking for this to form a very quality handle in the end. Now, this doesn't look like a super quality handle, but let's kind of just go over it. Okay. We start seeing a little bit of a head and shoulders forming at the top here, which I know we haven't really talked about that in this video or in this stream, but it's okay. We see a little bit of a head and shoulders forming here, which tells us that, okay, this cup top is very likely in, because at the top of a cup, once it's completed, you start looking for the structure to go the other way to create that liquidity. Now, whether this was going to be some massive downside handle before pulling upward, it's hard to it's hard to tell that, unless you're just physically trading within the session. And how did we know that this was starting to become invalidated with on the downside? It's because we start seeing our call entry here at the lower Bollinger. Well, why are we getting a call entry if we're expecting further downside? That's because we're not. Okay, that's because we're expecting this to start forming a cup at this point. Okay, which is going to invalidate that head and shoulders because again, it broke up above that price. And from that, we see this smaller cup form. So a lot of bullish structure, and all that bullish structure was doing is just building, 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 and being very patient. We allowed it to invalidate the previous bearish structure. By invalidating that bearish structure, that means that there's nothing to go on to push downward. Okay. Um, for a trader, that's a super good thing to know because that told us today that after this invalidation came in, we pretty much had nothing but upside. Okay. We had nothing but upside after that level. Okay. Now correlating upside to the daily time frame, and I do want to just hide the drawings for a second. But what's above us? And what did we just test yesterday? That selling of yesterday was a very, very clear 5 mod test. If you remember watching the stream, we pretty much talked about that in detail, how we tested the upper bounds of the 5 mod, the 5 mod itself, and the lower bounds. And then we started finding liquidity buying out of that range. Well, what's that telling us? Very likely we're trying to bounce upward towards this upper Bollinger. I should let me draw without all the other stuff, but very likely we're trying to bounce towards this upper Bollinger. Okay, because that's the next range that is above us. So on the 5 minute time frame, with seeing the invalidation of those bearish structures, that really does give us a lot of conviction and just credence to the fact that we know we can see upside from this range. We've already pushed past the downside. We've already tested the 5 mod. We've already tested that level. From that 5 mod test, either we're going to push downward towards the 20 mod, or we're going to push upward towards the upper Bollinger. With some of that bearish structure being invalidated, that was a very, very clear signal, green light, whatever you want to take it, that the upside today was going to be pretty much nothing but bullish. Okay. So that's a great question. What can we expect out of tomorrow's session. So let's go to some of our longer time frames. Right now we're kind of at all-time highs. There's not a whole lot for us to cling on to here. But what's some of the things that we do know for a fact? We do know for a fact that this larger cup has definitely formed. Okay. Now, from that larger cup, we see that, oops, I want to move that back. But we see that, okay, we have this smaller cup here, smaller handle. What should we be looking for? Now, either we're going to be looking for additional bullish structure to start occurring in here, which it has not yet, which means that since it hasn't, we need to start actually looking for bearish structure. Okay. And why are we looking for bearish structure again? This is a larger cup. Okay. I'm going to delete this area. But at the top of a cup, and I want to just delete all of this for a second. Once this cup closes, we look for bearish structure at the top of a cup. Okay. And again, why do we look for bearish structure at the top of that cup? Because we want to see the handle to the downside to give us the liquidity to continue heading upward. Okay, that's how we get that cup and handle. You have to have that bearish structure to give us that downside. So we start looking for bear structure. Okay, we're looking for head and shoulders, which if that completes, that will create that smaller inverse cup to the downside. Okay, now from that downside cup, wherever the bottom of that cup is, whether it's all the way at this range at the 735, if it comes down to see where the 5 minute Lord Bollinger is. It's not there yet, but let's just say that 5 minute Lord Bollinger goes to about right there. Okay, great. We have that inverse cup formed. Now, what do we expect at the bottom of an inverse cup? Kind of the exact same thing that we expect at the top of a standard cup. The structure to push it the other way for liquidity. So if this inverse cup fills, we look for the bottom, we start looking for bullish structure. So we're looking for inverse head and shoulders, which again, that inverse head and shoulders, what does that make? That makes a bullish cup. Okay. And from that bullish cup, we're looking for this to invalidate this previous top. Okay. Because if this is going to be this cup's handle, it has to be able to push to new grounds. It has to be able to push to new heights, whatever you want to call it. So tomorrow, basically what we're looking for is we're looking for formation of this bearish structure. Okay, we're looking for the push downward, but we're looking for where it stops. Once it stops where it stops, we're going to be entering calls because what's the upside from here? The upper Bollinger. The market is building a lot of structure to continue heading upward. So with that, we should be expecting bottom of that cup to come in, look for bullish structure at the bottom, very, very likely see a full breakout of where this cup top is. Let's just say it gets in there. We'll see very likely this bullish cup invalidating this bearish cup. And from that, we will then be looking for the handle. Okay, the handle on the day is basically where the major breakout's going to be because that's what's going to take you to the upper Bollinger knot. So hopefully that makes sense of how we can use these. But you basically want to see, you know, let me step back for a second. Whether you're bullish or bearish, it kind of doesn't matter. It matters that you follow where the structure of the market's going. Okay. Um, and the market unfortunately likes to trade in cups. Okay. It's something we see on literally any single chart, any single ticker, you're going to see this. You know, if we see a, again, inverse cup, we look for bullish structure from the bottom of that. That bullish structure is either going to give us a handle downward or it's going to invalidate that cup, invalidates that cup. That tells us, okay, more bullish structures to come. So it's a very nice way of building the whole thesis, the whole narrative, the whole story. Again, as traders, we're kind of basically being detectives as we're, going through all the symbols and everything and looking at all the structure. But we're trying to see what the machines are doing. Are they buying? Are they selling? What are they doing? Well, the machines do like structured trades. It may look like a mess. This may look like just random candles and everything, but these are all structures. We go down to the 1 minute time frame. These structures start building even further. Okay, you can see all sorts of different cups in here. Some of them are much smaller. Some of them get invalidated much easier. But there's tons of structure in here. And this goes even to the 1 second time frame. Okay, you start going to the 1 second time frame and you start seeing a lot of these same things. Okay, there's this cup here starting to form. There's cup, inverse cup, which gets invalidated by this cup. That gives us a new high, pulls down, which invalidates, some of that previous cup. We then get additional cups starting to form here. This potentially is telling us, okay, we can start looking for a handle to the downside. Well, that doesn't happen. Instead, we get this full cup to the upside, validates this previous bearish cup. And what does this tell us? That all of that previous bearish structure was just to fill this bigger cup. Okay, so from this bigger cup, we see, okay, we're starting to get a handle forming. So this is just how the algorithms like to trade on every single time frame. Again, doesn't matter if you're on the 1 second, the 1 minute, 5 minute, 30 minute, hour, daily, weekly, you're always going to be looking for these cups. Okay, we're always looking for these cups to either validate themselves or invalidate previous structures. When we were super bearish here, one of the things that we saw on the bottom here, which we were able to catch this bottom, this was the sell-off of 2025. We caught this bottom super, super well. What we were looking for is for this to start forming a cup to the upside to invalidate all of that previous selling. Okay, using our Bollingers, we had the lower Bollinger entry here. Well, this is telling us already that we're not expecting too much further downside here. Um, so from that downside, we start seeing the upside, and not only do we see the upside, but we see all of this previous bearish structure start being invalidated. Why? Because we start pushing above it. So once you push above the previous bearish structure, it's no longer in play. That bearishness is all out the window. It's been bought up. We're now in a new range. Okay. Kind of same thing here with the last major sell-off is that we got to the very bottom of it. It did create that entry for us with the lower Bollinger there. And what started happening? We started seeing massive buying, completely invalidating this entire previous selling range. So what's that telling us? Market's going to become super, super bullish. Okay. And so far, what have we been seeing? From that invalidation of the very top there, which was at the basically 700, we're now a whole $44 above that. So hopefully that makes sense. Um, there's a lot further to discuss with market structure, but I did want tonight to be fairly tame. And to keep it tame, it's easier to just focus on standard bullish cups or inverse cups. And this is something that I really want everybody to start trying to do with their trading is start trying to identify whether these cups or inverse cups are coming in. Because that could be very, very, very telling to what's happening with the next bit of price action. And these kind of trade into each other too. And I know this example is going to sound a little stupid, but I actually want to make this class eventually shown with Legos because these all piece into each other. Okay. Um, and I actually just want to pull up a different chart just so that I can kind of let's try with Meta. See what Meta's got here. So let's turn on the drawings. Oh, I spoiled that one. Apologies. But one way we can think about structures is sort of like giant Lego bricks. Okay, and we're just going to use green and red to represent bullish or bearish. Okay, so we see bullish there, bearish. However, the bearish has not invalidated the bullishness yet. See a little bit of bullish in here. Meant to do a square. A little bit of bullishness in here. And from that bullishness, can we potentially be seeing a breakout? Potentially. Um, the Lego piece has kind of been placed here, telling us that, okay, potentially we can now see this built into a larger cup. Okay. Well, what's that cup likely going to do? It's likely going to pull all the way to the top of this and invalidate it. Okay. So we can kind of just piece things together. Now we have this larger structure here. Actually has not been fully invalidated yet. So is this a cup top or a larger cup? And let's just go to the daily here. But is this going to be now a larger cup here forming? Potentially right here? Well, maybe. The pieces putting them together are sure looking like that. We're seeing this cup forming right here, and very likely we're going to be forming this cup all the way back up to that, what was it, 740, 745? So that's what we could start looking at. However, we do see that there's bearish structure here, and that we have not invalidated it yet. This bearish structure can still take us further downward. Okay, we could still see a bearish cup overtake this one. For example, if we see further pushing downward to where we invalidate this downside, then potentially we see this cup going downward or this next structure heading downward. And what does this do? Well, this starts to invalidate this bullish structure. And that tells us, okay, well, this isn't building to the upside. This is trying to build to the downside. Okay, so that's kind of how I like to think about it in terms of that. Thank you. That everything's very, very structured and that the market's trying to build for a new level, whether it's to the downside or to the upside. But use these blocks, use your structures to help you determine that. And this is without using any Bollingers or anything. But now all of a sudden we put our Bollingers into play here. Wow, this is a very clear signal. Okay. We see the overextension right here. This is telling us, okay, we're very likely going to be selling from there. Well, what does that do? That matches our Lego brick pretty much to a T. What do we see at the bottom here? We see the lower Bollinger. What's that telling us? Very, very likely we're going to be seeing buying in here. And what happens? We see buying all the way back up. Now, we don't see the upper Bollinger come in here yet. So this is telling us that, yes, there's bearish structure, but it's not, it's not off the road essentially. And that's kind of how I look at the Bollingers. That's why I have them in white because I try to make it look like a roadway. So usually on the roads, you don't want to be crossing the white line and going off road. If you do, that's telling you something that the market is basically off the road and it wants to pull back onto the road. Well, we're not seeing the market trying to off-road at this top here. So that's telling us, okay, if there's any form of selling, buying, whatever, it's very likely going to start consolidating in here, okay, because it's not pushing off the road. We start heading downward, and what's starting to happen? Well, we're not off the road yet, but potentially we could be heading there. And what happens if we get off the road? Upside. And what does this upside correlate to? Well, it correlates to that larger structure we were talking about. How potentially this could be turning into this larger cup. Okay. Potentially this larger structure s- to invalidate all of the previous selling structure. Okay. So that's kind of how I like to use my structures. We use them in conjunction with our other major indicators, but it helps build a story of what's really going on instead of just looking at candles and being very confused. It's like sometimes the moving averages can be a little confusing for people, and we're not going to talk about the moving averages tonight, but when you look at a chart like this, wow, that can be kind of a mess to look at. Well, instead, turn your moving averages off, mark some of these off the road levels, and then start building structure. Okay, what do we see in here? We see that, okay, we have structure right here. This is giving us a high from the off the road. This is giving us low from the off the road. So potentially, what is this telling us? That we could be building a very large structure to the upside here. Okay. And that's without even using any of the moving averages or anything else. Um, I'm going to keep this here for the next few sessions just so that we can come back to it and talk about it and see if we were correct about this being a bullish structure or not. So let me go ahead and look at chat for a second here. Yeah, you're very welcome. I know this isn't the most clear lesson. Again, I didn't really have any notes prepared for this or anything. I just winging it. So I do apologize for that, but hopefully you can see what the goal of drawing these cups is for. It's not just random drawings. Okay, this is actual market structure. This is something that we can heavily rely on. Okay, because again, I do this each and every day. I rely on these structures emphatically. I mean, there's a reason why my firm is called Cups and Handles. Um, it is a structure I look for very, 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 very much because it ends up turning into a lot of money. If you can identify, the cup coming, then what do we expect when we get to the bottom of that? Well, that becomes a huge buying zone. It's kind of like on that selling on, I believe it was Tuesday. Yeah, Tuesday. That was a really hard session. We saw the bottom hit. And from that bottom, again, we were expecting upside, not full upside in terms of some crazy push above the 5 mile yet. The 5 mile level is basically right at the center there. And once we pushed above the 5 mile, that then told us, okay, we're pushing above a major support level, even though we do have this very scary bearish inverse cup formed. But what's this likely trying to take us towards if we're starting to push above that 5 mile? Well, very likely it's trying to break us out of that cup. And it did very much so. It did exactly that. It broke us out of that cup, and it's now starting to try to reach to that upper Bollinger again. So that's why there's a lot of those times where I'll be like, okay, I'm really expecting the upper Bollinger. That's because we might be building right here. This is a perfect example. We started building really nice structure right here to potentially have a breakout. And we see the bullish cup, we see the bearish top of the cup, and what do we expect from that? We expect a handle to form, which we did. We get that handle pushing us upward, but we ended up getting some bad news that day. I think something with Iran. I have no clue. I don't really care right now. Um, but we see that we start getting that bearish structure at the top here again. And what does that bearish structure do? It pulls us all the way down and invalidates this previous bullish structure. Okay, now that previous bullish structure has been invalidated, this cup no longer looks as good anymore. Okay, because now we could see that, okay, potentially we have this huge bearish structure formed right here. Where is it trying to go? Well, very likely it's going to try to pull us downward. Okay, and what happens on that session? Pulls us downward. So it does help to kind of think of this as Lego pieces, how one piece is going to build into the next, how one structure can look like one thing for a moment and fairly quickly change into something completely different. But it is very important to identify whether the structure is bullish or bearish. Okay. And we do have the tools to do that, even if it's as simple as drawing a cup and handle. Okay. Um, whatever tools you can put in your pocket that's going to help you become, the best at identifying where the market's going, then use it to your advantage. Okay. Um, so yeah, is there any questions? Well, I guess my question would be, say a bullish cup forms, you expect a handle to form after buy calls on a pullback, forming the beginning of the handle. What would the stop loss be? Okay, so that's when we start using our Bollinger Bands. Okay, and I do want to kind of delete some of this previous structure here. But let's go back to yesterday's trading session. Okay, we see that, okay, potentially we have this very, very bearish structure. But at the bottom of this bearish structure, we're seeing us pushing outside of the Bollingers, which what does that say? That creates a buying opportunity. Okay. So from that buying opportunity, that's telling us, okay, that's putting a pause on this previous structure. We're now going to be buying to the upside. Whether it's just to the 5 mile, whether it's just a teeny bit, whether it's all the way up to the top of that inverse cup, we know that buying is coming, okay, because that's what happens with the lower Bollinger. Um, so where do we kind of put our stops at? Okay, well, we just need to figure out where the structure is going. Are we going to start invalidating some of this previous bearish structure? Well, that actually starts occurring on that session. Okay, we see that we pull upward and we invalidate part of this bearish structure here. Not all of it, not this massive inverse cup just yet, but we are starting to invalidate that. Well, what does that start to look like? Now, I know I haven't talked about the inverse head and shoulders in here tonight, but this starts building us an inverse head and shoulders. Okay, if we continue seeing this price action selling, creating a right handle, and then heading upward, or the right shoulder to head upward. Okay, so for me, I don't really look for stops so much. I look for overextensions. So, for example, even though I take my calls from the lower Bollinger exiting a decent chunk at the 20 mile, I'm looking for those to run. Okay, well, where am I looking for them to run to? Basically, the upper Bollinger range. Either we're going to see a rejection prior to that range, or we're going to see it buy all the way into the upper Bollinger, and then I can take profit. Um, but the first position should always be exited at that 20 mil. Okay, doesn't matter if you see the structure kind of building differently or not. Um, that's at least for 0DT scalps. Um, works a little different when we have dated positions. For example, when we saw this downside, we start seeing this cup structure forming. From this cup structure, we were expecting a handle to form. We get that handle, and even though by the end of the day, that's only at that point, okay, but it was starting to pull that handle upward. That gave us the conviction to hold all of our dated positions that very likely we're going to be trying to push a higher high in the next session. Okay, and what happened? We see bearish structure, but is that bearish structure starting to invalidate the previous bearish structure? Not entirely yet, but what is this starting to form? Okay, when we started to pull up here, well, all of a sudden, this bearish structure isn't just bearish structure anymore. It has now been overtaken by this cup. Okay, and not only is this a cup, it's a cup that has liquidity for a left shoulder, for the head, and now we're looking for that right shoulder liquidity. So the entire session today was buying the bounce, okay, or buying that sell down. Well, how do we know when to buy? Again, we look for the overextension within this is the 30-minute time frame, but within that 5-minute time frame, we were looking for that overextension. We had two major buying opportunities today, um, which both did extremely, extremely well. Um, but that's kind of how we identify that. We see that, okay, we're starting to have major buying opportunities on the day. We see that we do have this major cup formed here. Well, what's that kind of starting to create here? That's really creating this right shoulder. This is creating an additional cup. Well, what comes from an additional cup? Usually cups are built for breakouts. Usually you're trying to head upward if you're building that cup. And what do we finally see happen throughout the session? The invalidation of the top of the previous bearish structure. Okay, and that happens in the form of right there. So hopefully that makes sense. I know it's a little complicated, but it's just something that's going to take practice and time. And one thing that I think would work really well, and one thing that I really like our group chats for is that if you ever see structure that you think is bullish or bearish, draw it out, show it in chat, show it to me, and we can always go over it. Um, so yeah, is there any questions? Hopefully I answered that question properly. Yeah, yeah, AKCC Trader. Hopefully I'm saying that name right. But yeah, exactly that. Exactly that. even when futures are pushing and we're not seeing our price action, you know, going in tandem with it, for example, the futures itself could be building additional structures that we can be seeing playing out here. So let's look at SPACs. This is the last two sessions. We see that, okay, within the SPACs, there's this bearish structure. But today again, we break above that bearish structure. Okay, so that tells us that this bearish structure doesn't exist anymore. The people that were looking at this as a head and shoulders can no longer look at this as a head and shoulders because this shoulder has basically been blown off. And in gruesome terms, but the shoulder's gone now. Okay. Um, can't just get that shoulder back, buddy. Um, but from that, that's telling us, okay, we now have bullish structure leading into our next session. Okay. Um, previous bear structure invalidated. We now look forward to continuing upward. With this cup closed, we should be expecting a little bit of bear structure here. So again, this kind of alludes to what we were talking about within the SPY, but we do expect a little bit of a pull down. Okay, wherever we find the bottom of this pull down, we'll have to determine that, but we have the tools to do so by specifically looking at the 5-minute time frame, looking at where some of these over or under extensions are, and being able to buy into those. Okay, so when we see this trading session tomorrow, very likely we will have a pull down. From that pull down, we will see the lower Bollinger, and we'll look for the expansion below that lower Bollinger. Once we get that, we'll take that buy, head upward, and what does that do? That starts to invalidate the previous bearish structure at the top of the cup, starts to create all new bearish structure or all new bullish structure to the upside. Okay. What okay, let's see. What do we use for the basis mod type? So for the mod type, I use they're called the standard moving averages, the SMAs. On Webull, it's just called the MA. For these settings, I don't know why it shows the length 200 twice, but I use the 5, 10, 20, 50, and 200. And it would actually be really good if you took a picture of the screen right here and wrote some notes right here. You should write next to the 5 month, this is the 1 week retest on the daily time frame. 10-day is the 2 week retest on the daily time frame. 20-day is essentially the 1 month retest level. The 50-day is roughly the 1/4 retest level, and the 200-day is roughly the annual slash 1 year retest level. So why we mark those out like that is because on the daily time frame, the moving averages can basically become magnets that we can look for very, very, strict price action. So for example, the 20-day moving average, we should be expecting that to be tested essentially every 20 trading sessions. Well, we're far extended above that. So once we get our upper Bollinger move here, and once it actually pushes, what's the next target? That 20 mile. Okay. So we will be shorting the top of the upper Bollinger once it finally pushes in, and we will be shorting to the 20 mile because we haven't tested that 20 mile in over 20 sessions now. That's our target. I know the moving averages don't really go into tonight's discussion too much, but that's kind of what the thesis of that is. Now for the Bollinger Bands, I use the length 20. This is the exact same as the 20 mod. Um, this is why I have them both marked in purple. It's hard to see on my screen here, but they're both the exact same level. They're both right at the 720.03. They're the exact same thing. Okay. What the width is telling us is the volatility length from the 20 mil. So there's usually three settings people use. There's the one which is a much looser um setting, or excuse me, a much tighter setting to the volatility. I forgot the exact percentage, but I want to say it's around a 95% volatility move. So what you would see on the width of one is the Bollinger's pushing inward and being more tighter to this level. Okay. Now for the two that we set, this is, I believe, I always forget the exact digits, but it's between a 97 to like a 98% volatility move. These are the ones that we track, and these are the moves that are very consistent and back tested. Okay. If we set this to 3, it's going to be setting the volatility to like 99%, something like that, which means that a lot of these candles outside of the current Bollinger Bands that you see here wouldn't be that way. You'd see the Bollinger Bands just barely skirting those levels. So it doesn't tell me what I need if I have it set to 1, because we'll be seeing a lot more of those Bollinger Bands pushing outward than what we really want to see. We set it to 3, we'll barely see the Bollinger Bands expanding outside the lines. With it set to 2, that gives us enough to where once we see it push off the side of the road, we know we can start buying into that. Hold on, my Weeble just crashed. Been doing that lately. Oh, hi, Angela. Starting a Okay, still expecting a large. Hold on. Sorry, I'm getting all these pop-ups. Weeble has like a ton of pop-ups when you first open it on the computer. Still expecting a large correction by September. I know you asked that to Silverliner, but let's just kind of look over this. Where has the price action been since the major buy-up back in March? We have been heavily extended above the 20 mile. We've been heavily extended above the 50 mile. We've been heavily extended above the 200 mile. Okay. Technically, and I do apologize for the drawings. Let me go ahead and hide those. And technically, we've been extended above the 10 mile. Okay, so we have been basically foregoing all support in here. Okay. What does this mean? This means that this is overextension territory. Whether this is pushing, whether this is a squeeze or something, however you want to define it, but this is pushing above our support. So while we're expecting a little bit of selling to come in, this little bit of selling is actually quite large. Okay. Where's our 20 mil right now in conjunction to our price on semiconductors? Well, the current overnight price is at 532.50. Our our 20 mile is all the way down at 465. Okay. That's telling us we would have to see roughly a whole $60 downside from this range. Okay. Well, what happens if we see a $60 downside from this range? Is that going to start building some bearish structure here? Very likely, right? Very likely we might start to see it's becoming a left shoulder. We might start seeing this becoming a head, and we might start building out a right shoulder. Well, what happens if that starts to occur? Well, that's telling us that very likely we're going to be seeing some more selling. Okay. So we would look for that to continue pushing downward, and then we'd look for a buy within the lower Bollinger. Well, if we continue selling downward, that lower Bollinger will expand downward below this level. It's not going to go like this to a T, but just be imaginative here for a second. And from there, we'd basically be following this all the way down until potentially we see, okay, is this going to be going all the way down to the very bottom and creating a massive inverse cup to the downside? Potentially, right? If we start seeing that bearish structure building out, if we see continuation of selling, then we could say, okay, well, how long is this going to take? It took us, basically 2 months to get up to this point. It's going to take us roughly about 2 months to get down to that point if, we're going to be seeing that full price action. So it's what, May 15th or May 13th? So June, July, okay, June, July, potentially we could see starting heading down, and from heading downward, that would, start creating a pretty large sell-off within the market. So, that would correlate very, very likely to continued selling within August, potentially continued selling within September. Um, that can be dragged off though. For example, say we're staying bullish for the rest of the month of May, right? Well, then that starts pulling us into June, July for us to really start seeing some of that beginning of the bearish structure. And then for us to completely fill out this inverse cup to the downside, fully fill out this bearish structure, that might be all the way until August, September at that point. So it's hard to call it way in advance. You do have to really just follow the structure each and every day, and it will eventually tell you where that's going to go. Now, one thing that Silver and I watch for very, 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 very heavily is selling within the Hig. Okay. Selling within the Hig is one of the biggest signals to knowing if a major, major market sell-off is coming. Okay. Because what do we see within the Hig when we get those major sell-offs? We see this Hig price drop down very, very dramatically. Okay. Very, very dramatic drop. Very, very dramatic drop. Let's go back to the selling of, let's see, it was right in here. Basically right in here, we start seeing a lot of selling candles starting to occur, which is telling us, okay, there's very likely going to be selling within the market. You know, we saw a lot of selling in there. I know I'm not giving a very good example here, but we look for Hig to start selling off to really give us a signal. Now, are we starting to see Hig selling off here? Yeah, potentially we are. Um, we've been seeing quite a bit of selling candles in here, but what are these doing? They're starting to curve back up. So could this just be liquidity to be pushing into an all new high? Potentially. We have invalidated some of the previous bearish structure. We did have this very large inverse cup there, which is why I did have this head and shoulders marked here to begin with. But what did we do? We completely blasted the shoulder off essentially, and now we have this bullish cup and handle, which is telling us that even though the Hig was seeing some selling, which we absolutely were, we were seeing selling in the beginning of the year. We did have a little bit of selling due to the oil volatility, but very likely the Hig is trying to buy upward and see new highs. Okay. Um, if the Hig's trying to buy upward and see new highs, then what's that telling you for your equities? Your equities are almost 100% wanting to see new highs as well. So the Hig, super, super, super important to stay aware of because it will tell you kind of the top and the bottom of the market. If you see massive buying within the Hig when the market has been selling off, well, what's that telling you? Very likely we're going to be seeing some massive buying within equities. We see massive selling within the Hig, then very, very likely we will see massive selling within equities. Sorry, I'm trying to find the SPY. So that 18 months also goes hand in hand with treasuries. Um, Forgot the exact rule, but it's within the 10 year that and let's just go over the yearly. But usually within the 10-year, you can correlate the previous price action within the 6 months ago to what's going to be happening now. So where are we? May. So let's go back 6 months. That would be November. November gave us a low, and it's of course not going to let me draw on here. From that November low, okay, and this starts correlating in an inverse way to the market. But from that November low, we could expect that there was going to be a market low within the next 3 to 6 months. Okay, from that November, well, it's basically all, or it's basically um, October, but from this November low, we can expect that very likely over the next 3 to 6 months, we would see a new low within the yields. Well, what happened? We saw that new low within the yields, but we also see a new high within the yields too. So from that, this is in January, basically 3 months out, 6 months out, we see a new high. 3 months out from there, starting to push a new high. We do have the yield in March at 3.9% though. So can we be seeing a new low coming in? Potentially. It doesn't always work one to one with that, but it is something that um has held some weight to it, where the treasuries will kind of lead the market by like a whole 3 to 6 months, and you can kind of use that to your advantage. As we see the yields pulling up, very likely that's going to be showing us that there will be, buying currently. Um, yeah, I'm so tired right now. Yeah, hopefully this made sense tonight. Again, it was supposed to be just a very, very simple lesson on some basic structure, but it's structure that you see me use and trade with each and every session, and we use it very, very well. Um, so if I could start getting everybody to try to mimic those skills, that would be awesome. Because for me, it helps a lot. So for SPY, are we due for a retest of the 20 mile soon? So we're looking for a move into the upper Bollinger to enter a short position back to 20 mile. Yeah, that's exactly what we're looking for. Um, on the daily time frame, we're looking for this upper Bollinger extension from the day two upper Bollinger that will create very, very quality short positions all the way down to the 20 mile. Well, where's the 20 mile? 20 mile is a whole, basically $24 away from us. Now, every session we are pulling higher, the 20 mile will be pulling a little bit higher with us, but it still is an anchor point because from this upper Bollinger, we have not had a quality 20 mile retest since April 7th. Okay, so it's been well over that 20-day period. Um, the 20 mile is due as a timer. It's basically going off saying, hey, this level needs to be tested very soon here. Um, but the market's obviously super bullish. So we need to get that overextension within the upper Bollinger. We need to see that we need to go off the road to the point where we know that the market is going to start cooling down at that point. Okay, because once they go off the road, that's when we start taking puts. Um, kind of like the 5 minute time frame. We take puts on the upper Bollinger, calls on the lower Bollinger. It works the exact same thing with the daily time frame. Well, except we look for a very specific mechanic. So there is the upper and lower Bollinger mechanics, which I still don't have a clue how I discovered this. But whatever, right? The upper Bollinger mechanics work kind of as follow. So if we're going to be seeing the upper Bollinger tomorrow, which based on all the bullish structure and everything, it looks super, super likely. The upper Bollinger currently is at 745.50, and we're just going to use that level. We're not going to assume that it's going to be going up tomorrow, even though it will be. We're just going to use this 745 level as base it, to base this off of. So say tomorrow we get to the upper Bollinger, we get to that 745 range. We have to close above that level for the day one upper Bollinger. Okay, so that means that tomorrow, just based off of today's upper Bollinger, we should be closing above the 746. Okay, that would create that upper day or that upper Bollinger day one. Now, what do we expect from the upper Bollinger day two? We expect a higher high into downward consolidation. So if we're going to be closing at that 746 essentially, then what is a higher high from that? Well, we can add a couple dollars to it. We should be expecting that 748, 749, even 750 range. Okay. Once we get to that upper Bollinger day two, we start seeing that higher high come in. And what do we expect from that higher high? We start looking for bearish structure. Okay, and then that's where we start really looking on the 30-minute time frame, 5-minute time frame, start trying to look for a head and shoulders, an inverse cup, something that's going to tell us that, hey, the direction of the market's going to reverse here. Okay. Um, but from that day two upper Bollinger, once we identify the bearish structure, that's when we take dated short positions. Now, usually I try to take those for about 2 weeks out, but based on how heavily we've been pushing, I'm probably going to take them for a few months out, and I'll probably take a couple leap positions as well. We'll go over it once we actually get to the level. But from the day two, there's a downward consolidation that's fully expected. The first level would be the 5 mile, but again, we have our 20 mile kind of yelling at us at this point. Sorry if you can hear the vacuum. Um, but we have the 20 mile kind of yelling at us at this point, saying, "Hey guys, we have not tested this level in, over 20 sessions now. This is really starting to need to be tested. So, what can we fully expect from the upper Bollinger? We can fully expect push down towards that 20 mile. So that's going to be the next cycle to this rally is basically popping off this upper Bollinger move and then entering the shorts. Okay. Says YouTube is not responding. Hopefully I'm still live. Have a great night, Silver. Thanks for stopping by and everything, and it's great to have you in chat. I hope you are absolutely enjoying your vacation. And yes, those would be dated. Again, usually I usually try to date them out 2 weeks, but again, in this situation, we're gonna really be targeting some downside blood here. Um, especially because, and I don't want to use the previous structure here, but this is a completed cup. Okay. From the completed cup, we look for bearish structure at the top here. Okay, this bearish structure might be building all the way from April. Okay, even though it looks bullish here, this could still be a very large head and shoulders. Okay, if we get the upper Bollinger move like we expect, that becomes the head. We do have the liquidity here for a right shoulder. And what do we see? The 20 ma is right where we would see that left shoulder building at. So, is this starting to allude to a kind of top to the market? Potentially. Um, we're not there yet, but this is very, very potentially starting to form that market top, where we can say, okay, this is something we want to short. Why do we want to short this? Because potentially this can head all the way back down if it wants to form that larger inverse cup. Okay. So that's the thinking about it. When we push upward, once we start getting to the upper Bollinger, that's when you really have to start becoming bearish. Once we're at the lower Bollinger and heavily pushing that lower Bollinger, that's when you become bullish. Okay. Now, we knew not to go long on some of these previous lower Bollinger moves, but we still did go long. Um, and again, the exits on the daily upper or the daily lower Bollingers can just be basically those 5 mile moves. Um, from the 5 mile, have a retest, rejection, back downward. And we saw a lot of that within this rally or within this selling, is that we would push into the lower Bollinger, hit the 5 mile, start selling off again, pull upward, consolidate to the 5 mile, sell back down to the lower Bollinger, rinse, repeat until we finally got the breakout. So yeah, structure is super important, everybody. It's not just folly. It's not just people drawing lines on graphs. Some people might be doing that, but what we're doing here is very, very, very structured. Okay. We're looking for structures to invalidate previous structures. We're looking for very, very specific things to use as a key toward trading. Right? Right? I'd really like to come back to some of these and watch them again. Does after hours count for your Bollingers? Absolutely. Absolutely. Now, how these Bollingers will set is that the close will be set on basically it's going to set the level on the close. Okay. So tomorrow's upper Bollinger kind of already in play. Um, I'm not going to do the math on that right now, but we're just going to say it's basically going to be around that 747, 748 range, based off of where it is today. So that's already set, and the moving averages work the same way. Even though we might see the Bollingers and everything on some of these lower time frames shifting a little bit during the price action, the daily is based off of the close. So once we open tomorrow, it takes the closing values from previously, calculates those, sends us our new or our new moving average levels and our new Bollinger level. So that's kind of how that works. Now, is there any final questions? And also I will be streaming in the morning tomorrow. So the trading day tomorrow, we will be streaming. But I did want to do this small class on structure because structure is one of the most important things you can learn. Because I know before I learned structure, um, this is what a trading day looked like to me. It just looked like candles, you know? Um, whether we got upside, downside, it was just kind of vibe trading, right? Um, I didn't know what the heck was going on with those candles. Hopefully they went in the direction I wanted. Um, and hopefully I was betting the right way and looking at my other signals to hopefully tell me that my trade is going to go the way it wants or that I want it to. Um, but unfortunately, watching candles isn't going to tell you that. Um, watching what these candles are building will tell you that though, okay? Because these candles are there to only build the structure, okay? Um, again, what these candles are showing is what the algorithms are trying to do, whether they're trying to buy or trying to sell. What are they trying to create here? Are they trying to create price action to the upside, or are they trying to create price action to the downside? And that's all we're trying to track. Yeah, have a great night, everybody. Thank you for watching. I know it wasn't the most structured stream or anything, but hopefully it helps. We'll go over it again later on, and some of these levels we talked about, I definitely do want to come back to in a few months to look how they played out. But yeah, I will hopefully see you all in the morning. Again, I'll be live around that 9:15 a.m. Eastern Standard Time.